I'm Danny LeBeau, and welcome back to the Fourth Revolution Quarantine Edition. Today, I'm going to do a little bit of a level check because we did bust through one of the key levels that I was looking at last time, and we're going to take a look at the spread between tech stocks and the broader market. So the level I looked at last week, the 2940, 2950 resistance level, has actually pivoted to a support level here in the last couple of days. As you can see today, we actually bounced off that. We opened quite high, and then we fell down to that level and bounced right off of it. And it's interesting to see. This was a Fibonacci level that I drew out a couple weeks ago, and this is the golden ratio, the 61. 0.8% level that this whole Fibonacci retracement is derived from, and this has turned into a support, which is unbelievable considering the gravity of the situation we've been in. I mean, I don't think this V-shaped recovery, which we've been seeing in the last few months, is justified. I mean, we've had unemployment reach over 35 million claims in the last 9 weeks, and it's only expected to continue to grow. Right now, last month we had around 15% unemployment, which is depression levels, and that's only expected to get worse and worse. Where analysts are saying that we could see 25% plus unemployment by this summer, and that's just unprecedented. That's almost worse than the Great Depression of 1930s. And how could the equity markets be bouncing so fast off of that? So, I mean, one of the big things is tech. Tech has been driving the equity markets further and further up as we rely on this during this quarantine time. Things like cloud computing and video conferencing and any kind of technological advances have been allowing us to operate and function fully from our homes. And that's been seen here. We continue to spread this S&P 500 in red here and the NASDAQ 100 up here in the candlesticks. We continue to see a spread further and further apart every day. Right now, we're sitting at a 15% differentiation between the NASDAQ 100 and S&P 500. And this is only going to continue to grow. I think this is almost overdone. I know that tech is the future and tech is going to be the driver, but to what extent? I mean, we're only 3% off our all-time highs right now. How much further can we run? I mean, we are in a recession. I don't think there's much debating it. And with unemployment at its levels, I don't think we're going to see the same GDP we saw in 2019 for years to come. So I'm looking for a pullback here. I know the technicals are saying we hit this resistance level, and we're now looking to this 3,000 S&P 500 level. And I think once we hit that, we're going to bounce hard. I mean, there's nothing that can push us further. I mean, yeah, we see some optimism because the economies are opening and the states are opening. All 50 states are actually taking measures right now to open and reopen, but not to a full extent. It's going to be over a year till we fully open. Like, there's capacities on restaurants and bars that are going to be hampering their top and bottom line, and same with retail. Without demand from the broader consumer, we're not going to be able to reach these same earnings levels that we saw in 2019 for some years to come. So be very cautious with your equity buys. I would say take everything you say or see in the news with a grain of salt. I think the risk reward right now in the equity market is not good. I'm not putting any money in. I'm honestly hedging against a further downfall from this level, buying puts on the S&P or SPY ETF. So be cautious in your trading and look for a pullback. So this has been Dan LeBeau with the Fourth Revolution. Thanks for watching, and don't forget to like, subscribe, and comment. See you guys next week.